Hey, this is Martin Perdomo, the Elite Strategist, and you're listening to Latinos in Real Estate Investing podcast. And today I have a special guest. Her name is Lisa Rodriguez, and she works for New View Trust Company. She is a solo 401k and self-directed IRA specialist. And I want to welcome you, Lisa. Thank you for being here today and taking the time to educate me and my listeners here today. I'm looking forward to all of the financial education you're going to give us. And why don't you tell us a little bit about yourself? Tell us how you got started in the financial world, where you come from. Tell us about you.
All right. Thank you so much for the opportunity, Martin. I really appreciate it. My background is actually in the insurance industry. I started in the insurance industry with Liberty Mutual, worked there for about 14 years. And then decided to go ahead and open up my own insurance agency. So I had my insurance agency for about 5 years. I got to network with a lot of real estate investors and realtors and lenders. And the more I learned about real estate investment, the more intrigued I became. So when I decided to sell my insurance agency, I was looking for an opportunity to work closely with investors, to learn from investors. I do have a commercial property myself, and I have had a rental property in the past. So I found out about New View. One of my friends worked at New View and were telling me all about self-direction and what you can do with an IRA. And I was kind of mad because I had never heard of it before. And I wanted to know about it 10, 20 years ago when I had more opportunity, but I figured if I felt that way, there were a lot of people out there that felt that way. I wanted to go ahead and learn and educate others, so that number one, they might not make the same mistakes that I made. And number two, to help people grow in a different way outside of what they're used to learning about, which are, stocks, bonds, mutual funds, and give them an alternative to that, because not everybody understands that. And some people like you and other investors really understand real estate or notes or, other opportunities that I think that people would grasp and take advantage of if they knew that it existed.
Fantastic. So I want to start with a self-directed IRA. So I personally don't have a self-directed IRA. One of my mentors, when I first got educated as a real estate investor, when I first really got my education as an investor, and you're always learning, right? I'm always learning. So you're on this show because I want to learn from you. So I'm looking forward to learning from you. But that was one of the big things that my mentor said at the time. He said, get a self-directed IRA. I'm such a big action taker. I just take action. I did everything else, but I never set up a self-directed IRA. I went and I set up the LLCs, I set up holding companies, and I set up all these other things. I never got around to setting up a self-directed IRA. So can you tell us first, what is a self-directed IRA?
So a self-directed IRA is the same as a traditional or a Roth IRA. It's just what you can do with it, right? It's a word that's used to describe what you can do with it. So in a traditional IRA or a Roth IRA, if you went to Fidelity, Schwab, you would open an account and with the IRA, you could invest in stocks, bonds, mutual funds. With the self-directed IRA, it actually gives you the opportunity to invest in alternative assets, such as real estates or notes investing, private stock, and you are the one that's in control of it. So that's the self and self-direction. You find what it is that you want to invest in, and you let us know where you want us to send the money, and that's pretty much how it works.
Okay, so just to get clarity on this thing here. So an IRA, just so maybe people don't know, maybe someone listening doesn't know what an IRA is. An IRA is an individual retirement account. So yes. I can go purchase an IRA from my bank or Charles Schwab or one of those investment companies, whoever, right? And then they take my money and they would invest it in whatever funds or whatever, the stock market, let's just say. Mm-hmm. With a self-directed IRA, I would go to someone like you, Lisa, set up the self-directed for me. I give you the money, and then what happens? Can you explain to me what happens? Because I know the difference with when I give it to one of those guys, because I have a Roth IRA, but what happens when I give it to you for a self-directed IRA, when I have a flip or I have a BRRRR that I want to do a buy fixed rehab, and how does that work? Tell me, what do I do? Tell me.
So this is what the process looks like. You come to me, you say, okay, I either want to transfer the Roth that I have into a self-directed, or I want to get a new one. So
Okay,
the
so
first,
hold that thought. So if someone has an IRA right now, so it's not like you have to set up a new one. I can actually, so if someone's had an IRA for 20 or 30 years and they're listening, they can actually take their money from that account, transfer it over without having to pay the 59.5 penalty, 10% penalty.
that is
Transfer
correct.
it over to us. Transfer it over to you for a self-directed IRA, and then you can use it to invest in real estate yourself.
Yes.
Holy smokes, that's fantastic. Okay, go ahead. I'm sorry. I just want to make sure I was getting that. Okay,
Yes,
go,
so
give
that's
it.
part one. So part one of the process is opening the account, right? So you open the account here, and then part two is transferring the money in, whether that's a rollover from an old 401k that you have sitting because you left the company 10 years ago, and now you want to bring it because it's just been sitting there and you really didn't know what to do with it. That's considered a rollover. That's bringing the money over. Or like you said, you have a Roth somewhere and you want to transfer an IRA to an IRA. That's step number two. So however long that takes, usually between 5 and 10 business days, depending on who it's coming from. And then part three of that process is when you make the investment. So whether it's, the fix and flip or the BRRRR, whatever you talked about there, there's a purchase packet that is affiliated with that. So you tell us, okay, Lisa, I want to buy this house. This is the address. This is the closing date. This is the title company I want to use. You also send us a copy of the contract. That real estate contract has to be in the name of your IRA, okay, not your personal
Not my
name.
LLC. So not
Correct.
my LLC. Okay.
Correct, your IRA's name. And then that is pretty much the process. We review that paperwork within 2 business days. You have funding and you close and you're happy and we're happy.
Fantastic, fantastic. So for the most part, guys like me and the way I teach my students is we buy with LLCs. Is there a way around that? So, however, most people have their money in their own personal name. They don't have their money in an IRA. I'm just curious if there's a way around that to get it. You know what I mean? Because for liability purposes, we teach. Well, I was taught, and I teach my students to buy with an LLC, never in their own personal name.
In the IRA, you can either have it use your account number or your name or both. Some people do it that way. So you can do that so that your name is not there, but it'll show like an account number. Or you can use your IRA and purchase an LLC with your IRA, so 100% share of that LLC. And then essentially you have checkbook control with that LLC. It wouldn't be one that you already have in existence. It would be a new one that the IRA basically purchased.
Okay, fair enough, fair enough. Now, okay, so we talked about the self-directed IRA, how it works, and we can roll it over. So we can also roll over if someone has an old 401k. I just want to make sure I repeat this because this is extremely important. Someone has an old 401k with an old job. Guys, listen, if you're an investor and you have $25,000 with an old job somewhere in a 401k, Lisa just told us that you can roll it into a self-directed IRA, not pay the 10.5% penalty if you're under 59.5, because there's a penalty. If you're under 59.5 for taking the money out, you can roll it over, no penalty, and then use it to go and buy real estate and create wealth with it. Am I correct on that? Yes or yes, Lisa?
That is correct.
Okay, fantastic. Now, where is the benefit to a real estate investor to get and set up a self-directed IRA? What is the benefit for an investor to set up a self-directed IRA? What's the benefit of that?
So it's the tax advantages. And here's kind of an illustration that I'll try to paint a good picture for you of. If you had $1 and you doubled that dollar for a period of 20 years, right? So the investment's $1, it doubles every year. $1 turns into $2, $2 into $4, $4, $8, all the way for 20 years. Because of taxes, right? You're paying about 25% taxes. So after 20 years, that dollar turns into $72,000. Okay, which is good. If we turned $1 into $72,000, that would be a pretty decent investment. If we took that same dollar and we put it in an actual retirement account, and we did the same thing, same investment, same dollar, same doubling of the investment over the same period of time, which is 20 years, that dollar would turn into over $1 million. It's about $1,048,000. Okay, so that's the power of using a tax advantage account. If it was in a Roth, you would take that $1,042,000 and say thank you very much. If it was in a traditional account, you may pay, I don't know if you were taking it all at once, probably 40% taxes, but you're still going to have $600,000 versus $72,000.
Got it. So I have a question about the Roth. So if I have a Roth IRA, can you explain what a Roth IRA is for those that might be listening that don't know what a Roth IRA is? Can you explain that real quick?
It's the after-tax dollar, the post-tax dollar. So you're basically going to pay your taxes on the seed rather than the crop. So going into it, you're paying taxes beforehand, and then you're putting the money into the IRA after tax. With the traditional.
So your gains are not taxed, correct? On
Correct.
a Roth IRA, so people understand.
Correct.
So you can make $1 million in gains. When you take it out, it's not taxed.
That is correct.
Okay. Now, if someone has $100,000 in a Roth IRA and they want to move it into a self-directed IRA, then what are the implications on the gains there? Does it still stay tax sheltered or not?
Yes,
Maybe
it does, because you're essentially transferring it.
So that self-directed IRA becomes a Roth self-directed IRA in essence, what you're saying?
It's the same. Yes, the word self is pretty much a moniker. It's just so that you know the difference. It's not a traditional IRA that goes into stock markets, right? It would be a traditional self-directed IRA or a Roth self-directed IRA. So it's basically saying they're alternative assets.
Got it. I got another question for you. So now let's say someone's got that same $100,000 in their Roth IRA. And I know I'm asking a lot of questions because I'm learning from you, just like I told you I would. So someone has now $100,000 in their Roth IRA and they want to put it in their self-directed IRA, but they want to invest that $100,000 with a company like mine, with a syndicator like mine. I buy apartment buildings with groups of investors. Now they're just a passive investor and their money is usually tied in for anywhere between 3 to 7 years, and they get cash flow and they participate on the cash flow. How do you treat that then, Lisa? What happens, how is that looked at? How is that treated, being that the money's gonna sit there for that long?
That's okay. I mean, if you're comfortable with that as far as a time frame is concerned, I mean, we don't put a time frame on it. If you want it involved in some investment for 5 years, 10 years, 30 years, that's entirely up to you. Whenever you get your profits, if you get them monthly or annually, it goes back into your IRA.
Yeah, so my investors, the cash flow, my investors get quarterly distributions based on the rents. So what happens do they have to put their cash flow back into it, or can they use the cash flow to do whatever they want to with it, right? Because basically that's their dividend.
It goes back into the IRA, because remember, the IRA is strictly for retirement purposes, right? So perfect. If you wanted, you could take it as a distribution, but yes,
I'm gonna tell you why I love this right now. We're working on a deal, my business partner and I. It's a small commercial deal. It's 11 units. It's not that big, but we are working with investors, and the average rate of return on that deal over the course of the 5 years is 18%. So can you imagine 18% on a rental asset, right? And then you just putting it back in there. Basically, in 5 years, you double your money. My investors are going to be doubling their money when we execute on our business plan. So I really, really love what you're saying right now. Let's talk about the CARES Act.
Okay.
Lisa, tell me what's going on with the CARES Act and all of this stuff. Like I said to you earlier, I read the CARES Act, but tell me, what are the effects of what we can do, what we cannot do in terms of the CARES Act that was passed this year?
So the CARES Act says, and you can go to irs.gov and look through their frequently asked questions on the CARES Act, but it basically says that if you were affected medically or financially by COVID or someone in your household, then you can essentially take up to $100,000 of your 401k and take that for a period of 3 years. Now, you can take it and you can roll it into a self-directed IRA, and then essentially start self-directing that money. It's the first time in over 40 years that the gates have been open to your current employer's 401k. Usually that's not the case. Usually you can take an old 401k. So the only way that you could ever take from your 401k in the past is if you left or you retired that job, you know, or you know, you were let go, and then you had access to your 401k. But now, due to COVID and some of the requirements there, you can have access to your 401k, which is huge for people like you and your listeners that are real estate investors that have not had that opportunity in the past.
Okay, so now you can get up to 100,000. So they allow you to take out 100,000 if you have a COVID related financial hardship, right? What are the rules in reference to putting it back?
And what you have 3 years.
I know there's no penalties. I know there's no penalties because of the bill 748.
Right.
But what are the rules to put it back?
You have 3 years in order to put that back. I'm not a tax professional, so I don't have all the, you know, inside. However, I have heard in speaking with some of my clients that you can either pay the taxes at one time or over 3 years. If you end up putting it into another retirement account, such as a self-directed IRA or solo 401k, then you can either adjust your next taxes if you had to go ahead and pay them. So it's absolutely advantageous for any investors that want to get out of Wall Street and come into Main Street.
I'm glad you said Wall Street coming into Main Street. I want to talk to you about that. Wall Street is, in my opinion, we're at a bubble right now. You being a financial professional, what are your thoughts in what's happening in our economy right now? We are officially in a recession. We have 2 consecutive negative quarters of negative GDP, which officially makes it a recession, although it doesn't feel that way in the streets. Well, at least in my world, people are spending money, buying cars and it's just crazy, but it's happening. I mean, it's weirdest recession ever. And what is your thoughts on that? What do you see?
Yeah, personally, I was affected. I mean, so in March, I don't know about you, but I had some money in the stock market and I lost a lot of money in the stock market, and then it came back, and you know, and so I took that money right away and put it into my self-directed account here, because I said I'm not going to let that happen again. But yeah, it's so weird, and it's such a hard time to kind of describe. We're in the middle of pandemic. We have so many people unemployed. Real estate market's hot in our area here in Florida. I mean,
the whole country,
entire country. It really doesn't make sense. The stock market came back. Again, we have so many people in the middle of evictions, in the middle of, you know, foreclosures. I mean, it's really an interesting time, and I just don't see how it's going to continue in the direction that it was going. It's slowed down a little bit, but I mean, it's just so unpredictable and so volatile. It's very hard to really make a determination of what that's even going to look like tomorrow, nonetheless, by the end of the year. So, I mean.
Gotcha. Can you share with me maybe you could share a story, one of our listeners, with any of your clients that are real estate investors that have had some success using a self-directed IRA. Do you have any stories like that you can share with us?
Yeah, we have a client that he started his self-direction about 13 years ago. He started with, I think, $58,000, and he is currently over $1 million in that account. And the same for his wife. I mean, he's pretty heavy on education and real estate investment, and, you know, buying land, and I mean, he really has grown the account substantially in a short period of time, and he teaches that as well as part. I mean, you know, educators in real estate investment, just like you and a lot of the listeners that are here. But I mean, there are people, there's some of our clients buy raw land, some buy storage facilities. I mean, we've had even race horses. I mean, you name it, there's a lot of things you could invest in. It's a very interesting job.
So tell me, what are the things that you cannot invest in once you have a self-directed IRA? What are those? Because I know that there are some things you cannot invest in. What are those?
It's like when you have kids, right? And your kids are opening the refrigerator door and jumping on the furniture. You're telling them, don't do that, don't do that. You don't tell them what to do, right? It's what you don't do. And that's kind of the guidelines that the IRS has for us. So the first thing they tell us is we cannot purchase life insurance in our self-directed IRAs. Life insurance is for after you pass, and IRA is for your retirement, right? The second thing that they say is that you can't buy collectibles, you know, fine arts and things like that. That's hard to place a value on those items. So the IRS just says they don't want to deal with that, and we cannot purchase those in our IRAs.
That's it? So just life insurance and collectibles?
Those are the
That
two.
was pretty, that's pretty easy. Okay, that's great. Lisa, this was awesome. I'm so glad that you came on here.
Thank
Is
you.
there anything else that we should know as investors that we haven't covered yet? Is there anything else that I should know as a real estate investor that we haven't touched on? So I can use this money basically for if I want to buy rentals, I can use it, right?
Mm-hmm.
I can use the money, but the cash flow, I have to put it back after expenses, correct? I have to
That
put
is
my cash
correct.
flow back in. Now I can buy fix and flip with it, right? Can I keep my capital? Can I keep my gains and put the principal back, or do I have to put the principal and the gains back my into that self-directed?
So everything goes back into your self-directed account. The rent, the monthly rents, when you sell the property, remember there's no capital gains, right? Because it's in an IRA. So everything goes back into the IRA for retirement purposes. You mentioned the fix and flip, so I'll comment on this and I'll say that just remember that everything that's done with your IRA must be passive investment, right? So there are some disqualified parties, right? So yourself, your lineal ascendants, that's going to be your parents, grandparents, lineal descendants, children, grandchildren, yourself, spouses of any of those individuals, and businesses owned by any of those individuals. So for example, if you were to purchase a flip, you would have to hire somebody to do the flooring, to do the cabinetry, the paint. You couldn't hire your dad's company, and you couldn't sell it to your child, right? Because those are disqualified parties. You couldn't have any sweat equity in that either, okay? Because you couldn't go in and, I don't know, change out the toilet if you wanted to. But everyone else in the world is eligible. So however many millions of people are there, it's just those few people because the IRS just does not want you to have any sweetheart deals with them or, you know, make any inside deals that they're not aware of that's going to affect your retirement and the possibility of, you know, having some issues with that. So the people that are not on that are, you know, sisters, brothers, you didn't hear that, cousins, aunts, uncles, right? Just make sure that if you have them and you're using their businesses or something like that, that you're being fair and doing fair market value charges for that. So if you're renting to them, whatever the neighborhood's fair market value is for rents, and, you know, just to make sure you're on the up and up with that.
Amazing, outstanding. Thank you so much for sharing with us today, Lisa. If any of our listeners want to get a hold of you, and like I said, maybe they have some money, they want to move it into a self-directed IRA, and then they want to call me, of course, and say, hey, Martin, I want to partner up with you and do a deal. Maybe we have a flip or something, who knows, right? Or maybe we have an apartment complex we're buying and they want to partner, they want to move their money through one of my teams. How can they get a hold of you, dear?
We are at nuviewtrust.com, and that's NUVIEW trust.com. And that's the best way. You can go there, you can download our e-guide, which kind of talks about some of the points that we spoke about today. There's a lot of beneficial resources on our blog. There's webinars and podcasts and articles. So, I mean, there's a lot of information where they can learn, or they can call and ask for me. Again, I'm Lisa Rodriguez.
And what's that phone number, Lisa, so people can have it?
It's 407-412-7177.
Okay. And thank you so much, Lisa. This has been very insightful. I learned a ton from you. I knew I would. And I'm sorry if I asked a bunch of questions there, a bunch of, you know, but I want to learn. I started this podcast because I like to learn, and all of the insights I get, and I get to share it, and others learn with me. So it's a great thing. Thank you, Lisa. And I'd love to have you back on soon. When the market starts to shift and we start seeing some changes here. So
I'm grateful for the opportunity. Thank you, Martin. Have a good day.
okay.